Just recently, in the month of January, I took my $100,000th in payouts from various prop firms. Now, in the first couple weeks of February, I've already taken out another $40,000 in payouts. Now, what I'm doing to earn these payouts is nothing special. It's very easy to learn, very repeatable. I do it every single trading day. And in this video, I'm going to show you step by step exactly what I've done over the past couple months to take over $140,000 in payouts. Before we get into that, if you guys are interested in joining my mentorship and coaching program, there's a link for the application to that down in the description below. There's also a link to my free Discord as well. Okay, so first things first, let's get into the actual payouts themselves. As you guys can see, this is my Take Profit Trader dashboard. This is a live video of the actual website. This is not a screenshot. These are all the different payouts that I've taken. This was one single payout copy traded across 5 accounts. So the numbers are a little bit off because Trade8 doesn't trade perfectly when you copy trade with them. But either way, about $22.50 per account, leading to approximately $11,000 in profit. However, this is after their profit split, so the actual amount that got taken out of each of my accounts was right around $14,500, but they take a pretty decent chunk of profit. I believe it's 20%. So this was right around a $14,000, $15,000 payout, but after all said and done, it ends up being right around $11,000 in total. And believe it or not, this was actually my first time ever setting up Take Profit Trader accounts. It took me, I believe, 2 attempts to actually pass the combine. But once I passed the combine, I immediately was able to take a payout within the first, I believe, 2 trading days of these accounts. So that's the nice thing about Take Profit Trader. There is no minimum amount of trading days or a minimum amount of profitable days. All you need to do is be above their buffer, which is $2,000. So any amount of money you have past $2,000, you're able to pull out. So all these accounts, I got to approximately $5,000 of profit and was able to pull out $2,200 per account in order to collect this payout. Now for the other set of payouts that I got, these were with my 5 top sub accounts. As you guys can see here, $5,000 per account. And then after the profit split, it ends up being $4,500 per account. So in total, another $25,000 payout. As you guys can see here, every single top step payout I've taken has been for the maximum amount of money, which has been my goal all along and it's been what I've been working for. So I'm glad that this is how my top step dashboard looks, because this is what I was always planning on doing, and I'm glad that it's worked out for me every time so far. In case you don't know, the way Top Step works is you're able to pull out half of your account's total profit after 5 days of $150 profit or more. So in this instance, each of my accounts got to $10,000 of profit, and over 5 trading days, I was able to pull out half of that money, $5,000, which is the maximum that Top Step allows you to take out. So those are the 2 payouts that I've taken so far in February. However, it's only the 17th right now, so there's still plenty of time to go, and I've got active accounts open with 3 different prop firms right now, so there's still potential for plenty of money to be taken out in the rest of the month of February. So now that the payouts are out of the way, let's get into my actual strategy that I used every single day in order to acquire these payouts. Okay, so now getting into my actual strategy. I'm going to explain it a little bit different than I have in the past, just to give you guys a different outlook on my actual strategy. And in this instance, I'm going to use a live account. This is live market data that we have right now. So I'm going to use this to show what I'd be actively looking for if I were to be trading in this exact moment. Okay, so to summarize my strategy, very simply put, what I'm looking to do is, number 1, identify the high time frame trend. Number 2, find the low time frame trend. And when those 2 trends line up with each other and they're both going in the same direction, at that point, I will look to join in on the continuation of those 2 trends in order to catch a large move in the overall market. So based on those criteria, that's how I determine what direction I'm looking to go, whether I'm buying or whether I'm shorting. And that's also how I determine whether or not I'm actively looking to take an entry or not. If the trends on the time frames do not line up, I'm not taking a trade. However, the second they do line up, that's when I'm going to start looking for entries. And then the direction of my trades is all going to be based on what the high time frame trend is doing. And once the low time frame trend meets up with the high time frame trend, at that point, we're looking to enter in trades. So based on the current live market data that we have right now from this graph of NQ, we are currently on the 4-hour chart. So this is a high time frame chart. As you can see, we have broken our previously established lower high from this downtrend here. And it appears that we are starting to enter into an uptrend according to the 4-hour time frame. So based on the 4-hour chart alone, I'm going to start looking at the other time frames in order to confirm that the trend is up on the current market. So now I'm going to switch it to the 1 hour. And as you can see, the 1 hour is giving us more information, more candles. You can see that we are definitely starting an uptrend. And all I'm doing to define an uptrend is I'm tracking previous highs and previous lows and seeing if they are higher than each other or if they are lower than each other. If they're higher than each other, then we're starting an uptrend. So as you can see here, this is our first low and this is our first high. And then the following low is higher. The following high is also higher. The next low is also higher. And the next high is also higher. So when you're getting consecutive higher highs and higher lows, this is what I define an uptrend as. So now at this point, I'm going to continue zooming in to the lower time frames until eventually I'm at the 1 minute. So again, as you can see here, a clear uptrend on the 15-minute time frame. Now I'm going to zoom into what I start to consider low time frame, which these are my execution time frames. And what I mean by that is these are the actual time frames I use and look at when I'm actually entering in a trade. So now to flip to the 5 minute, you can see that the 5 minute is not looking as good in terms of an uptrend as the higher time frames were. And that's no problem. The only thing we're going to do from this point is just sit back and wait for an uptrend to be established on the low time frame. And then from that point, we can start to look to enter into trades. So now for me personally, I enter into my trade or I execute on the 1 minute time frame. So I'm going to zoom into the 1 minute time frame real quick and see how that's looking. So as you can see here, at one point we were in a solid uptrend on the 1 minute. However, we are entering this period of consolidation or horizontal trading. So as of right now, there's no way that I'm looking to enter in a trade during a time where over the past approximately 30 minutes, price action has not moved from this same like 15 to 20 point range. So during that, if I don't have a well-established directional trend, I'm not looking to take a trade during this time. So prior to this, these entries looked like they would have been potentially really good. Right now, the price action is so terrible that I'm not looking to get chopped around for the foreseeable future. I'm looking to have a much more well-established trend before I'm going to do anything in terms of actually entering in a trade. So that's my analysis for the current market conditions that we're in right now. But now let's talk about actually setting up trades, where our entries are looking to be and where our take profits and stop losses would also be. So in terms of setting up take profits and stop losses, I found that the best way to do it is by using previous market structure. And all I mean by that is prior highs and lows that have already been established in the past. Now, one thing that is very important to keep in mind when setting your take profits and stop losses, especially your take profits though, is going to be the current context of the market in terms of volume and volatility. Now, what I mean by this is when you're setting your price target for the day, if the large influx of volume and volatility for the day has already happened, then it makes less sense to go for bigger plays or higher time frame price targets. Now, what I mean by this is the biggest influx in volume and volatility throughout the day comes at a couple different points. One of those being the 9:30 New York Open. That is going to be the biggest increase in volume and volatility that consistently happens every single trading day. Now, along with this, there are also important news updates. During times where news gets released, which is usually pre-market, but sometimes it does happen a little bit after market open, there's another huge influx in volume and volatility. So what this means very generally speaking in terms of our strategy is that you should look for bigger plays during the morning of the New York session. This is due to the fact that that is going to be consistently the largest increase in volume and volatility. This is where the biggest moves are going to be made day in and day out. So what we can take away from this information is that prior to the large spike in volume and volatility throughout the morning of the New York session, I can set my price targets at much higher goals. So if this were to be prior to the New York Open, I could set my price target for the day potentially at this high right here, or maybe even this one right here, which is hundreds of points away from the current price of NQ. However, because context of the market matters so much, and right now we're trading in the late afternoon, I'm gonna have to set my price target at something that's way more realistic for the current conditions of the market. So due to the fact that the major spike in volume and volatility and the major moves of the market have already been made today, I'm no longer able to use these higher time frame targets that are hundreds of points away in terms of actually taking a trade that's realistic for my current situation. So now what that means for us in our current situation is that we are no longer able to use these higher time frame targets, and we're gonna have to zoom in to lower time frames in order to find out a price target that actually makes sense for the current context of the market. So what I'm going to do here is I'm going to switch to the 1 hour and see how that's looking. And then as you can see here, we're getting more candles, which means new highs and new lows are also being mapped out at the same time. So now I'm going to zoom into the 30-minute. And as you can see, we're getting more and more candles, more information. I'm going to zoom into now the 15-minute. And what's becoming more and more obvious as we're zooming in is there are really only two possible price targets for us to take for the current session and the current situation that we're in. So the first one I want to look at is this previously established high right here. However, the problem with this one is it's almost 200 points away. Even though it was just established a couple hours ago, it is still so far away from the current price action that this seems a little bit unrealistic, at least in my opinion, for the current situation we're in, where we're trading at the very beginning of the Asia session right now. So the other price target that makes the most sense to me in this situation would be this previous high established right here just a couple candles ago. So now what I'm going to do at this point is I'm going to draw a line. So I'm going to go to my horizontal ray tool. I'm going to draw a line right here just so I don't lose my point as I start to zoom into my execution time frame. So I'm going to go down to my 1 minute, and I'm going to see that we still do not have an established uptrend on the 1 minute. So at this point, I'm not looking to actively take a trade. But the second that this low time frame trend flips to now an uptrend, I'm going to start entering in trades until this price target gets taken out. So this means if I enter in a trade and it fails, and I keep failing and failing and failing, taking break-even trades, taking losses, whatever it may be, I'm not going to stop as long as the low time frame trend and the high time frame trend are in my direction. I'm not going to stop until my target is taken out, whatever amount of profit that may be, whether I catch 100% of this move, 90%, 50%, 30%. I'm not going to stop taking entries until this target is taken out or market structure changes and trend changes as well. So now in terms of actually setting your stop loss for taking this trade, there's a couple different ways we can do it. I'm going to set up my brush tool here, and I'm going to change the trend so that it starts trending in our direction here. So let's say that price action were to go like this. There's a couple different ways that you can set up your stop loss, and it all depends on how much risk you're willing to take. So very easily put, we can set our stop loss at the very bottom of the current trend that we have set up. This is going to be the safest and least risky stop loss, looking to catch the total continuation of this move. However, there's another way that we can set up our stop losses, and for this, I'm going to look at this uptrend that we have right here. So let's say that we were to have entered really late into the move that established this previous high right here. So let's say our entry were to be right here at this red candle. What we could do in terms of setting up our stop loss is that we could move it to the previously established low. In terms of this much smaller move, rather than using the beginning of the trend, which would be way down here, it wouldn't really make sense for us to place our stop loss down at the beginning of this uptrend, which is going to be way down here, because the risk to reward on this is going to be much, much worse, and your profits are going to be really small. So if we were to use this as our actual stop loss, rather than setting our stop loss way down here, this is going to be a much better trade where we can actually take a little bit riskier trade, but the reward is going to be much better if it does pay off. So now in terms of actually entering a trade, again, we're going to be looking at this uptrend right here, and we'll just go ahead and set this as our price target just for this situation right here. So let's pretend this is our price target, and this is currently where price action is at. So in terms of actually entering in a trade, the first thing I want to do is see new higher highs consistently established along with higher lows. So this is a perfect example right here, setting a new higher high, a new higher low, new higher high, new higher low. So at this point, what I'm going to be looking for in terms of actually entering in a trade, in a perfect world, I will have right here what is called a rejection candle. This is where price starts trying to sell off, but immediately gets rejected on the low time frame, signaling that price attempted but was immediately rejected to go in the opposite direction of where I'm looking for my trade to go. So this would be an ideal entry in terms of catching this move right here. This exact candle right here would be absolutely perfect. Now, if you were to happen to enter a little bit before or a little bit after this happens, it doesn't really matter too much. These rejection candles can also be considered confirmation for the current direction. So if you were to enter in the trend at a different point, just a random point during this uptrend, you see a candle like this happen, and this confirms that price has attempted to go down, but was immediately rejected, signaling to me that we're looking to continue in the current trend direction. So what I'm going to do now is using this rejection candle right here as our entry point. I'm going to frame up the trade using a couple different stop losses, and we're going to look at our risk to reward ratio on each one. And then based off that, you can see how setting up your stop loss at different position affects the actual outcome of your trade. So I'm going to set up my long trade tool right here. And the first thing I'm going to do is set it up using the bottom of the trend as my actual stop loss. And as you can see right here, this is a 1-to-1 risk to reward ratio trade, which is not bad in my opinion. This is not how I trade. I don't normally go for 1-to-1 risk to reward ratio trades, but this is how I were to set up the trade, taking the absolute least risk possible. The other way we could do it is we could use this bottom right here that was previously established, and now the trade is looking a little bit better in terms of risk to reward, a 1.7. Or the way that you can do it if you're going for a perfect entry, like the best absolute highest risk to reward trade you could possibly take, I would use the bottom of this rejection candle that we have right here as my stop loss. And if we set it to that, you can see this is an 8 risk to reward ratio trade. So if you were risking $100, you would make over $800 if you were to do this trade using our stop loss as the bottom of this rejection candle. Now, whichever way you want to do this, whichever way you want to set up your trade is completely up to you. I just want to show you the different ways ways that you can do it, depending on the actual amount of risk that you're willing to take in your trades. And that's basically it from start to finish. This is my entire strategy and process, and with it, I was able to make over $140,000 just in the past couple months alone.